Hello and welcome to Voyage 2019 presented by Aditya Birla Sunlife Mutual Fund and powered by ET Now. The 6th edition of this annual event was held recently in Mumbai, continuing its aim of empowering an ecosystem of knowledge for investors, distributors and mutual fund advisors to tackle what looks like a turbulent year for the Indian markets. Now, this year's theme focused on how soon would the Indian economy reach the $5 trillion mark, and a number of domestic and international speakers shared their views on the same. Now, over the course of the next few weekends, we'll bring you the highlights of this landmark event. And to kickstart the series, we have the opening note by the CEO of Aditya Birla Sunlife AMC, Mr. A. Balasubramanian.
Very warm welcome to each one of you for the 6th edition of Vibrant Investment Voyage Conference. As I look back, our first year of Investment Voyage was held 5 years back in 2014, just before the general election. And this year too, our 6th Investment Voyage meet is being held today, before the general election. There is a coincidence. At that point of time, there were rising concerns around general election outcome and political stability and macro and microeconomic drivers impacting economic growth and market volatility, among many others. At that point of time, we at Aditya Birla Sunlife Mutual Fund happily embarked on the journey of creating a platform for our valued partners to discuss and make an attempt to see through the developments by inviting extremely experienced industry experts, policymakers, apart from our own team, in order to get a deeper insight on the way forward, thus helping us take an informed decision. At this juncture too, I would like to also say proudly that we as an AMC are committed to give the right input, especially during distress time, and stay in the forefront, disseminating all the information and developments that affect the investment world and handle our customers to generate the best possible experience over a considerable period of time. It has been a great journey since the time we did our first voyage. We started with a small gathering of about 500 participants. And this year, we have more than 2,100 participants coming from 140 locations across the country. Incidentally, this year, we are completing 25 years in the mutual fund industry since we began our journey in 1994. So my sincere thanks to all our valued partners and customers who has been part of this wonderful journey all these years. Over the years, the assets of mutual funds have grown leaps and bounds, has crossed the monumental milestone of 24 lakh crores. I will not be wrong if I say the mutual fund become a strong counterforce for the foreign institutional investors. While the FIs continue to pull out money, the Indian mutual funds were predominantly the largest net buyers for most parts of 2017-18 and 2018-19. Of course, in the last 6 months, India received the highest inflow among the emerging market, close to about $10 billion size. The year 2018-19 was more of a consolidation year with a marginal drop in the overall growth momentum. I have been sharing for quite some time that the year bygone was a unique year, recalling the event of one of the biggest, the failure of global financial institutions in the year 10 years ago. And coincidentally, this year, even ILFS crisis exactly came around the same time in the month of September as it happened in the US 10 years back. As a result of the uncertainty surrounding one of the oldest infrastructure finance company in the country, the fear spread gradually to the NBFC market and promoter financing deals, and finally developer financing. We must also remember the entire source of problem began when RBI declared a handful of banks under the prompt corrective action framework, thus stopping them from any incremental lending commitment till they discover they are adequately capitalized to do so. When these developments continued between September and December period, I could recall the infamous 2008-9 crisis led by liquidity squeeze and post-financial collapse in the US. And there was a fear of liquidity, and credit crisis lasted for about 6 to 9 months, maybe or 12 months, and then returned to normal as the government started addressing all the issues one by one meticulously, and thereby bringing normalcy in the system. And this time too, a similar incident has happened, though one can say the current problem is of local in nature, but the fact of the matter is that necessary liquidity steps have been taken by Reserve Bank of India, and therefore the banking system actually has managed to overcome the pressure in the last 3-4 months. In the same way, equity market too went through a unique experience. And equity market performed well at the Sensex and Nifty level. However, rest of Sensex and rest of Nifty did not deliver good performance and taking a deviation from the past trend. knowing very well that in the long run, market will not be driven by few stocks. We should hope to get broader market movement in the coming year in order to get the stock picking opportunities to deliver the right outcome on the portfolio. I am sure today's various insightful sessions will allay my observations, any potential concerns of yours which will help you draw the right perspective for the way forward. With all these ongoing ups and downs, Indian mutual fund industry continued to focus on growing the retail and SIP book. The retail asset base in the industry has crossed 10 lakh crore. Monthly SIP book crossed 8,000 crores mark with almost about 2.6 crores live SIPs. And the overall industry folio account of the industry has crossed 8 crores. While all this growth is tremendous, the potential of the industry is still largely untapped. And it appears to me that we have just scratched the surface in tapping the full potential of the industry. With the continuous change in the regulatory environment, and what has remained unchanged is the growth potential and untapped opportunity. That remains in abundant opportunity that still prevails. Currently, less than 2% of the Indian population invest in mutual funds. And secondly, the asset base of the Indian mutual fund industry constitute a meager 20% of the overall banking deposit base. Therefore, for the largest success of all stakeholders in the industry, it will be critical to drive the business growth, mainly focusing on two parameters: the number of customers being added to the industry, which all of us have to keep counting, how many customers we keep adding, offering products that has high relevance for the customers in their portfolio through the right asset mix coming from both equity and debt category. It cannot be just only one, it has to be both. When I look back in the last 6 years, we have grown holistically as a Aditya Birla Sunlife mutual fund, not only in terms of assets under management, but also in terms of customers and market expansion. We as a fund house have been keeping high focus on building our size with the retail customer base while building our equity mix in the overall assets under management. In the current year, we are not only building our assets further, we are also focusing on solution-based approach in categorizing our products under the 4 solution bucket. We have now categorized all our funds in 4 solution bucket in the name of saving solution, which is nothing but liquid fund, the income solution, which is nothing but selling the fixed income product, a wealth solution is nothing but an equity product, and tax solution, which is nothing but, of course, providing an alpha to the investors through the tax consideration. Going forward, I am sure the industry too will move in this direction, provide solutions-based products, mapping all their needs, and therefore the solution being provided. After seeing this huge scale and growth in the last 6 years, now let me highlight what has led to this kind of growth and highlight some of our key initiatives that we undertook. Our strategy around 3 Ps, people, performance, and process. I'm also adding to that another 2 Ps which I learned from our own Sunlife partner, which is nothing but a philosophy and a product, and supported by 3 Cs, namely clarity, commitment, and consistency, with a clear motto of making it a win-win-win for all of us. Win for investors, win for distributors, and win for AMC. In 2014, we were present in about 96 locations. Currently, we are present in 320 locations. Some of our own branches, some of our spoke locations, some of our emerging markets, single-man branches. In order to further step up our engagement with the distributors, we have an in-house team to manage a complete distributor lifecycle management called Sampark, which also takes care of the one-click empowerment of new IFAs who get onboarded through AMFI. As the world is moving towards moving the digital direction, we too have evolved and have launched exclusive Aditya Birla Sunlife Mutual Fund partner app and a partner portal, which acts as one-stop solution to all our needs. As I always say, our primary motto is to make your journey easy and make your job easy. Fortunately, some of our predictions have come true. Obviously, some of the predictions have not even come true. So always, for every plus, there is a minus. As we move to the new financial year, and 2019-20 seems to be different, with both Sensex and Nifty touching all-time high. It also seems to be getting into a new orbit with the rising expectations on the political outcome. I also feel that this year ahead is going to be filled with a lot of news. As always happens, many unknown variables that can drive the sentiment towards investing world, in particular to financial service sectors and mutual funds. That's why the theme that we have designed is when, how fast India will become vitally into economy. And personally, I am bullish on the ultimate benefit of the GST and IBC, which is Indian Bankruptcy Code, that can really unlock its potential in adding greater value to the economy. As I emphasized in the previous year, I personally feel that we are building an economy which is getting future ready. The two bold reforms such as GST and IBC will surely help in building the next leap of growth and help achieve a $5 trillion economy soon. One of the big advantages of $5 trillion economy is that, as we all know, that market cap is linked to the size of the economy. If India becomes $5 trillion economy, the market cap has to become $5 trillion market cap. Therefore, the next 5-6 years, the census also has to be reflecting the $5 trillion economy in terms of the number going up. That's the beauty of the $5 trillion economy, that's the linkage. And today's conference will give you more insights around a strong and vibrant economy. I am sure the discussion will be very interesting and helpful in building our next business plan, business growth. I also extend compliments to ET Now, who are our media partner. I would like to end by saying we remain humble and stay committed to build our business with the wonderful partners like you. Let me conclude with a quote. In the middle of difficulties, there always lies an opportunity. I am sure in the current time, we will find where the opportunity lies and draw a roadmap for ourselves. Thank you.
With the tone of the day being set, the audience was charged up to hear our next speaker, renowned corporate advisor, journalist and chartered accountant S. Gurumurthy. His keynote address is up next after this short break. Welcome back to Voyage 2019, presented by Aditya Birla Sunlife Mutual Fund and powered by ET Now. The first keynote speaker at the event was renowned journalist S. Gurumurthy, who shared his views on the Indian economy, entrepreneurship, and most importantly, the problems restricting India's growth. Let's listen in.
I am concerned with a slightly longer idea of the economy and the nation. What I think we, as a very important component of India, should be doing. This is not a very ordinary group. It's not easy to assemble this kind of audience, talented, competent, working on the ground, and at the same time connecting the world with India and India with world. It's an audience of quality. So we need to have a much higher a helicopter view of what's happening around us and the world. But unfortunately, in the Indian discourse, there is not only bias and prejudice, there is really no India-centric discourse in this country. I would like to show how there have been 4 great tectonic shifts in the world. One is, now the shelf life of ideas is coming down rapidly. Colonialism lasted for 200 years. Capitalism lasted for 100 years. Communism lasted for 50 years. Globalization is running out of steam in just 25 years. So there has been a great stress on idea generators as to how to lead the world with a long-term idea. Second thing is, in the last 25-30 years, there is a huge shift taking place from the Euro-West to Asia in terms of economic power, in terms of military power, in terms of technological power, in terms of, most importantly, demographic power. The third thing is the rise of India itself. No one thought India would ever rise. And I will tell you the reasons why it was presumed. India is not a country which was destined to rise. And it was a globally determined, globally accepted, and a globally decided proposition that India could never develop. When I tell you this, you will be surprised as to how India began developing in spite of the great philosophic, economic, political, and social pronouncements against India, that this is not a country which was destined to develop. Till about 20 years ago, this was the opinion at the global level. So that India is now rising. Its soft power is rising, its hard power is rising, its economic power is rising, its intellectual power is rising, and nobody is in a position to ignore India. So this is a very important tectonic shift from the Indian and Asian perspective. The third thing on which I will focus a little more is that the whole world was looking at a one-size-fit-all model. till about a decade ago. Now that one-size-fits-all model has been virtually given up by the proponents and expounders of the model itself. This is very important for us because we are operating in this country, and this is not a country of a size which the world could ignore, nor it could ignore the world. Because the very size of India makes India relevant for the world. So we have got to take these 4 important shifts which has taken place in the last 50 years or so to understand how we should be looking at the global economy, the Indian economy, and also our own corporate's role in the ecosystem. We see a very different approach to economy, savings, investment in this country. And how is it different? But in India, social security and health security is largely privatized because of the idea of family and relationship. This relationship is a very important component of the Indian economy, which decides not only how people relate to each other, but how do they invest? How do they save? Which instrument they choose? If Indian economy is not choosing equity as a prime instrument, contrary to what American investors are doing, the important reason is the idea of family. They do not want to risk their capital. We did a research in Coimbatore. We took a survey of lady financial and economic professors in 70 colleges and asked them, what is your savings model? They said first it is bank, and then some house, and then some land, and then some chit funds, and then some. And finally, only out of 272, 5 or 6 people mentioned we also look at equities. So we asked them the last question that you teach in the class, equity is the best model of investment to beat inflation, to grow. But when your personal investment comes, you don't invest it like that. He said that is only for teaching, that is not for saving. This shows how the theoretical India, the India of the public discourse that is taking place, is very, very different from the functioning India. In all relationship-oriented societies, my study is that equity investments are less, fixed and safe investments are more. Today we are trusting the government to think for all. No, the government cannot think for all. We have to think for the government also. There were days when you could go to the government with a petition and an application for the government to say yes or no. Today you have to tell the government, this is the position, this is the plus, this is the minus, this is what we will do, and this is what you have to do. There has to be a proper education of the system itself. In fact, the Indian industry, the Indian financial system has not changed from the days of the socialist order. It is merely pleading with the government, do it, but you have to offer solutions to the government. India is poised for very high growth is something which is admitted. It will happen in spite of all this, in spite of the government, in spite of this lack of opinion making, because there is an Indian energy flow, and which I have studied, which I have personally experienced. And then I came to the conclusion there is so much of entrepreneurial energy and talent in this country. You may be surprised, which is the place with the highest per capita income in India. I will tell you which are not the places. It's not Bombay, it's not Delhi, it's not Calcutta, it's not Chennai, it's not Hyderabad, it's not Bangalore. It is a place called Morbi in Gujarat, where you have 1,000 ceramic units, 150 diamond cutting units. You have 2 huge wall clock manufacturing, Samay and Ajanta. The population is only 250,000. 150,000 is employed. Highest employment rate in the world. The only language they do not know is English. This is where I found something very, very different is taking place. The community-driven entrepreneurship, family orientation, savings being circulated among them. It's a huge social capital which is working under the ground, unrecognized, unidentified, and unpromoted. And that is the real strength of India. 92% of Indians are self-employed. So my request is, which I make in many platforms, which I make here also, in the life of Maharishi Aurobindo, there is an incident. Aurobindo had come from Bengal to Pondicherry. The British had crushed the entire revolutionary movement. There was pitch darkness everywhere. Nobody was talking about freedom. So Aurobindo, everybody was looking to Aurobindo. He was a great intellectual, educated abroad, come back to India, fought the British. And so everybody was looking to him for advice. So he was looking to a mad mystic called Kullachami, about whom Subramanya Bharati has written poems also. So everybody was worried what has happened to Aurobindo. He is looking at a madman when we are looking at him. So one day at the backyard of his house, Aurobindo was sitting and having a cup of tea with 5 of his friends. Kullachami came and lifted the teacup in front of Aurobindo and showed it to him. It was full. Then he emptied the teacup and showed it to him. Then he placed the teacup and went away. Aurobindo said, I have got my message. So his friends asked him, you have lost the tea. Please tell us what message you have got. He said, you empty your thoughts and begin thinking afresh. This is what the Indian intelligentsia should be doing. Thank you very much.
Some truly thought-provoking ideas shared by S. Gurumurthy. Well, that's all the time we have this week on Voyage 2019, presented by Aditya Birla Sunlife Mutual Fund and powered by ET Now. We'll be back next week with more insights into the expected growth of the Indian economy and the views from the top deck of Aditya Birla Sunlife AMC. Thank you for watching.
What RBI has done in terms of the rupee-dollar swaps, that has helped to also bring stability on the exchange front.
Stress in the banking is still fairly high, and I think our monetary policies have tightened significantly more than what they did in the past.
Now, and with regards to cyclicals, that's largely to do with where we are in the economy. If the economy is going to pick up, then I think industrials will do well.